Hey San Clemente, January has been a little bit crazy. We've had some wild rain, crazy winds, and it feels like the month has flown by, but it also feels like it hasn't gotten started. Couple all of that with super low housing inventory and just a very interesting market. I'm gonna give you exactly what I see happening and the 7 key housing market statistics to help make sense of everything. Stay tuned. I'm Ryan Schramm. I'm the broker and owner of Ryan Schramm Real Estate here in San Clemente. Please subscribe to my channel if you like to stay in touch with exactly what's happening in housing here. You can follow along with the housing reports that I put out each month. They're super easy to understand and it will help you keep your finger on the pulse for what's going on. All right, let's take a look at the first key stat. It's demand. When we're looking at demand, we're looking at the pending sales over the month prior, which right now is up 4% this week. But demand is still incredibly low overall. That's because of higher interest rates and simply not a lot of houses on the market. As we see more listings come on here, as we get out of this kind of funky beginning to January, you will see demand pick up where traditionally demand is highest in the springtime market. All right, let's look at the second key stat, which is active inventory. These are homes that are on the market available for purchase, and there's only 69 to choose from today. That number is incredibly low. And if we look at the last 7 days, the last week of activity, there were 8 new listings that were put on the market and 3 listings that fell out of escrow and came back to active status. All right, the third thing we're gonna look at, which is super important, especially right now, price reductions. Out of the 69 active listings that are on the market, 5 of those had price reductions in the last week. I love watching price reductions because it's a very good vital sign for what's happening in the housing market. Right now, you're gonna see a lot of those price reductions that are happening where sellers went a little too aggressive. They targeted a price that was a little bit too high, and buyers right now with the way rates are, they're not interested in going after listings that they feel are listed, over market value. But I can tell you the homes that are listed correctly for that fair market value, they seem compelling as far as a price standpoint. Those are the homes that you're seeing still selling within 3, 4, 5, 6 days on the market, or even 2 weeks is a short expected market time. Mortgage rates, what's going on with the rates? Well, we've seen some reprieve. They've come down. Remember last year when they peaked at 7.2%, my lender this week is quoting rates in the high 5s, which is, fantastic news. So many people have said, oh my gosh, it's gonna go down or it's gonna completely stall out. It just hasn't. We can see when we look at these stats, the market has continued to move along. What prices have done or what they're doing is a little bit more difficult to tell. We know that they're not going straight up like they were for the last couple of years, which is, in turn because of rates, but it is good to see them kind of start to find an equilibrium at this 5% range. All right, let's move on to the closed sales. In November, there were 41. In December, there were 51 closed sales. And in January, it's the 27th to date, we've got 31 closed sales. I don't even know if we'll make it to the numbers that we saw in November. We certainly probably won't make it to December numbers. There just isn't enough homes on the market right now to see as many closed sales. So the closed sales numbers, very low as well. All right, so moving on to the next key statistic is the expected market time. That's when you open your house up for sale. It's day 0 on the market. You just put it on to the moment you accept an offer. Now, if we look at the expected market time right now for homes between $1 and $2 million, it's 92 days. If you can believe it, last year, that number was down around 20 days. So in that next price category, $2 to $4 million, we've got an expected market time of 116 days, which it may seem like a long time just based on the numbers we're talking about, but it's actually what we call a balanced market. Last year, the expected market time for this price range was 34 days, crazy low. But again, this year we're seeing more of a balanced market. All right, the last thing we're gonna look at is what selling season are we in for the housing market? We're currently in the winter market and coming out of the holidays, which is always a very, very sluggish time of year. So I like January, I like to watch when do things really get going. And I started the video by saying we've had weird weather, and as strange as it sounds, as much rain as we got, things were kind of slow to go, but just in the last 7 days where things have cleared up, I've definitely seen a pickup in activity, and I only expect that to continue as more sellers put their homes on the market, we're gonna see an increase in demand as well. Okay, so my general summary for everything we just went over, here's what I'm seeing. Sellers putting their house on the market, the home has to be priced correctly. Even if you put your house on the market and you don't have an offer in 10 or 15 days, we're looking at how many showings came through the house. Is there good private showing traffic? Because if there isn't, the home's overpriced. So not only do you have to make sure you go out to the market at the correct price, you really have to be ready when you do go to market. How is the house performing? Because you don't want to sit and wait 30, 60 days where the property gets stale. Sellers who act quickly using the data, the performance of the home on the market, are going to sell their house sooner and for more money. Buyers, I hear a lot of mixed opinions about what's happening, but there's really only what's actually factually happening out there. Rates are pulling back. This is an opportune time to be looking at purchasing. Why? Because I think once rates really find their equilibrium point, we're going to see housing prices and appreciation start to increase again. Right now, the best way I can describe it is it's kind of this flat zone where we went from doing this to this now. Maybe a little bit of this in spots, maybe a little bit of that. For all intents and purposes, it's flat, but there's not enough homes on the market. There are not homes stacking up to where buyers have all this opportunity to choose from different properties. So it's kept the activity in a weird way, like healthy activity where homes are being bought quickly if they're priced right. So why I think it's an opportune time for a buyer right now is because you might have negotiating power against a listing that went out for too much money. Negotiating leverage against a seller who is taking too long to act to bring the price of their home down. It might be on the market for 60, 70 days. When in the last 2 years have you seen an opportunity to make an offer for 5% less than the asking price or 8% less than the asking price and get a seller's attention? That's why if you can buy like that right now, and then as rates continue to kind of depress, like they're trending in that direction, I think you'll have bought at kind of a low and slow spot, which is good if prices continue to rise. With all that said, the market is absolutely different and new right now than it has been for the last couple of years. So doesn't matter what shoes you're in, we just need to talk strategy and what works best for you. Reach out to me, shoot me a text message, or give me a call. I'd love to chat with you. Thanks so much.